Mr. Mark Selby, how are you, sir?
I'm doing very well, Mr. Matthew Gordon. I'm sorry I missed you in Cape Town last week, but I had some other things going on, which didn't allow me
Yeah,
to make the trip. So,
good. Well, that's why we're going to be talking about it a little bit today. A little bit more when I see you in Cape Town, in Toronto. The one thing I did get from Cape Town was a suntan, so it's not all bad news. Which was makes me stand out a little bit out here on the slopes. I'm in Sweden at the moment with the family, so a little bit colder, so minus 15, but what can you do? Right, we are going to talk a little bit about the market today, get an update on what's happening and why, and some company news as well. So we're going to romp through a few companies, and maybe you can give us a little update on what you've been doing as well. So markets first, what do we need to know?
sure. So, since the last time we talked towards the end of January, we've continued for the most part to trade in that $17,000 ton range. There we've been since mid-December. Again, we talked last time about the whole bottoming, all the news flow from a capitulation point and some more capitulation, this week as well. Again, starting to see that those inventories climb up as some of that surplus does make it, into the exchange. Inventories, again, fraction of what people are calling for, and we've talked about it many times. We won't talk about it today. We're in the quiet period right now. This is Chinese New Year. It's officially a week, but basically the whole country kind of slows down for a few weeks. We've seen a few bumps below 16,000, but they've been relatively short-lived. I actually thought we might go all the way back down to 15,400. Still a tiny chance, but with the price action that we've seen in the last few days here, we're moving back up into that 16,500 range. What some of the chatter is the EV restocking, that I said was going to sort of turn this market. They're actually seeing the EV supply chain continue to buy through Chinese New Year. So that's a good sign, and a good sign that this restocking is happening. And again, once we get clear of Chinese New Year towards the end of February, we'll start to see what that really is going to look like in earnest. So fingers crossed, a few green shoots. And we'll see whether they continue to grow.
Right. Okay. And obviously, EV's one side of the coin. The other side is obviously infrastructure build out. What do we know about what's happening in China or indeed Europe and the US?
Yeah. So the key here in terms of the other big part of the market still is stainless. And again, we saw lots of negative news all year economically, interest rate rising and so forth. But again, in China, we saw overall stainless demand grow by 13%. The highest nickel containing grades, 300 series, grew by 11% last year. That was offset with some shrinkage in North America and Europe. Again, some destocking going on there. But again, once the EV cycle turns, prices start to move, you should also see a stainless restocking rally, and again, on track, I think, for more than double-digit demand growth, through the coming year. Again, the kind of capitulation news that we've seen for the last bit just helps reinforce that you are close to a bottom, and again, sort of supportive of what I think will happen through the course of 2024. As we move back up towards $20,000 a ton by year end.
Right. Okay. We're obviously very, very much interested in, the equities side of things. These junior companies need to work out a plan of how they navigate what has been quite a tricky market the last 3 years for precious metals. Battery metals even, been hit a little bit over the last sort of couple of years as well. And nickel, especially so, last year where we sort of, a few peaks and a few troughs, shall we say? And you've explained the rationale in terms of why the market is driving it that way. But for the companies themselves, it's really, really important they work out the financing. Financing, if you're an explorer, just to be able to keep drilling. For developers to be able to kind of show and prove up that they will be able to get this thing over the line economically and obviously into production. You put out some news. Was it earlier this week? Was it end of last week?
It was the end of last week.
End of last week. Was it the end of last week?
Yeah.
Which is another kind of step in terms of the development and hopefully allows you to get into production. Tell us a little bit about that, because I want to talk to you about how you kind of package up the number, the money, as it were. But let's start with that bit first.
Yeah. So the key thing, we're lucky to sort of be at the sort of the end of the process where we're moving towards production. And, for those of us in this space, despite all the negative noise, there is no slowdown from the car companies. In fact, it's accelerating in terms of, we need clean, green, IRA compliant nickel, that can be sold into North America and Europe. And we would like it as soon as possible, please. Governments, I was just in Ottawa yesterday and had an excellent day, with the various departments there. They want, they promised the battery companies that, Ontario and Canada was a great place to build battery plants because you could have a fully integrated supply chain from the mine all the way through. So, as one of the few new big mines that can come online before the end of the decade, we're not quite there yet, but you will see a bunch of announcements, as the year progresses in terms of, support on that front. The announcement last week was really about the missing link. The most mining companies really focus on just producing that first, whatever that first product is that they can produce, and they worry about, the rest of the value chain showing up and doing what it's doing. The reality in the nickel space is, unlike copper and zinc, where you've got lots of smelters, there's benchmark terms, you don't really even think about the downstream. Nickel really only has a handful of nickel smelters globally, and, they almost effectively work like an oligopoly. And so it's always made it challenging for new standalone mines to really, develop in a way and capture a good chunk of the value. So, what we announced yesterday, again, there's an arc starting with our company back in 2020 when we created the Net Zero Metals subsidiary and said, that subsidiary is going to take care of processing our material, and we believe it can deliver, a net zero carbon product to the market. We all, went to the extent of trademarking some of those terms. So, for 2+ years, we've been working in the background on getting this launched. And so we announced with the press conference in Timmins last Thursday, we had the provincial minister of mines speak. We had the mayor of Timmins speak. We had one of local First Nations communities, speak on the project. If you want to get the link is on the website. If you want to hear from them what they think about the project and what we're doing, that's there. But we announced we're going to, through a multi-phase expansion, get to be the largest nickel processing facility in North America that can take not only our feed, but a range of other feeds using proven technology that has a low environmental footprint. And then as well, we have our magnetite concentrate that has some chrome and nickel in it that, it wants to go into the stainless alloy sector, and we are going to help it there and build a plant in Timmins to do it. And again, from both those facilities, any carbon emissions that are generated, we can take them right back into our tailings and make them a net zero process. So we've got a bunch of interest, in both of those plants as well, particularly because they can be net zero carbon, and people are looking for ways to decarbonize that stage of production. And most critically from the governments, again, yesterday in Ottawa, the fact that we can deliver this missing link that no one's talking about building in North America to any extent. It's exactly what the market needs, exactly what the government needs. And so, again, it's a very exciting time. And we put a team together. Mike Cox ran Inco's operations for 30 years, ran their global refinery network for a good chunk of that. And so built a team. We've got one guy from Korea, another guy from Japan who's worked in and built or operated these type of facilities before. And, they're there to help, take this project forward for us. So
okay, so all moving ahead for you guys. They say you're advancing towards that, decision about how this thing gets built, how it gets funded to be built, and like I say, I'm kind of, now you've got Anglo American on board, then in no quick order, in double time, Agnico Eagle, and then Samsung. I guess that was the thing people got excited about just for Christmas. Is the money is critical to this, because it's a big project. So I'm really interested in the kind of the government's angle here and how they can help you. So when you talk about government departments, looking at things like this, what are they looking for? What problem are they capable of solving for the companies, and what problem are the companies solving for them?
So the big thing for us is, because we were moving very, very quickly before, and we were relatively early in the critical mineral space in terms of the current wave, we were sort of ahead of where the government funding programs were. So we really weren't able to tap into some of the money that was available. They have now, kind of caught up to where we are. And so both on the mine perspective and on this downstream processing plant, there is money to help support engineering studies. There is money to help support, the actual, starting of construction. There's different funding vehicles that can provide different chunks of capital to help you get through the various phases. And so, we've put a bunch of applications in towards the end of last year, and we expect as the year goes on, we should start to see some of those funding announcements, which will help cover a large portion of those costs, as we move through the year. So, we're super helpful on that front. And then on the overall construction financing, again, the tax credits, the refundable tax credits themselves will provide a minimum of 30% in terms of the critical minerals, and then 50% for the carbon capture and storage. And then there's a whole alphabet soup of other programs that can provide funding through different vehicles. So, we're quite confident that between the government and the potential offtake partners, as I said before, this is, one of these once in a generation opportunities, where you can get a lot of very low cost capital to do what you need, to build a business that is going to last for decades. And again, I still don't think the market's woken up to the fact, and again, Electra early this week or in the last week announced, they've got a project that's about $60 million Canadian, and they got another $5 million from the Canadian government to help them complete the construction of their refinery in the area. And so, again, that's 7 to 8% of the capital that they need to build the project. So, that's one small example, but it's an example, the start of the work, that the government's doing to really support the sector here in Canada.
Right, and I know you've got the kind of like the first mover advantage, as it were, in terms of the kind of greenfield companies coming through. There obviously there's an existing ecosystem out there, and that your region is big in mining, etc. But as one of the newbies coming through, are you going to be able to, or are you having conversations with departments which are not learning on the job, but have a really firm, strong idea of how to get these things done, come up with solutions, and work with you to get them over the line? Or is that first mover advantage possibly going to work against you because they're not quite there yet? And how's it work?
Yeah, I would say, to be honest, for the first 3 or 4 years of our existence, that first mover was almost a disadvantage. The speed at which we were going was faster than they could get the programs in place. And, obviously, as you get towards feasibility study, things start to slow down a little bit. And so the nice thing is now the programs are there, and we're largely in sync with that. We'll still, we'll be one of the first recipients of a bunch of the money that these groups will be giving out. But the good thing is, we're now, the window is open, and we're now at the front of the line, to basically be able to get some of that capital out of that window.
Right. So I didn't mean it sound like the same question in a different way. It's more about not necessarily, is the money there? Are the people behind that money really clear about the types of structures that can get done, or are they still kind of working on that, or will it be on a deal by deal basis? I mean, how liberal is the Canadian government going to be, or is it going to be, is it a business transaction?
Yeah, I would say there are some of the funding groups that have their structures well defined. There are other groups that are still working through it. And like everything in life, sometimes the best way to figure out how to finally decide how you're going to do something is you've got to make a decision, in the near term. Part of our message in Ottawa yesterday was, we're moving towards permits and a construction decision in mid 2025, which is now 16 and a half months from now. And so we want to have the funding package in place by the end of 2024 to be able to do that. So any support you provide we would really like it. And again, they know that, and they heard it, and so yeah, no, it was a constructive day yesterday, and again, I look forward to seeing a bunch of government announcements for a bunch of projects. There's a half a dozen or more good critical minerals projects in this country that deserve to get some government support, and I think there's been a lot of talk for the last 2 years, but I think you're actually going to start to see the checks starting to fly as this year goes on.
Yep, and just got to think of those jobs being created as well. So and taxes paid. Okay, well, let's get on to. I'm sure we'll rip through some Canada nickel news in detail, like I said, over the next couple of weeks. But let's get on some other company news. Buxton Resources, they're at it again.
Yeah, it's structurally looks smaller. Again, the previous announcements do a great job of laying out. If you guys want to see what a good exploration announcement does, that really describes what the size of the opportunity is and where this particular drill intersection sits relative to the size. I think they're excellent. Unfortunately, IGO has an earn into it, so they're only going to end up with a percentage of it. And IGO is a massive company, so it's tough to play that out. But this is really an interesting greenfield discovery that we've got very few of. So again, I would continue, to track that one going forward. The other high grade result was Nican, which is a company with some projects in the Thompson nickel belt. One of these projects is down towards the south end, actually very close to the Reed mine that I once owned and it's now closed with RNC Minerals, which is a high grade copper deposit. Nice, shallow, great interval. Challenges. Not really, they did have some diagrams there, but it looked like it was close to some historic drilling. And again, no context of actually how big it could be. So a good sniff, we'll have to see sort of, how it plays out, but, a little bit of a question mark around that one. The other decent grade stuff came out, Life Zone, which is the Kabanga project in Tanzania, which is, the best high grade undeveloped nickel sulfide deposit, because of the previous political issues in that part of the world. Some nice step out. So, they were being a little cheeky. There was a couple holes that had had this target, and they've now connected it. So it is, a decent extension. There were some other historic holes around it, but again, some decent grade showing up at the bottom of the structure that they're looking at. So good grades, sort of similar to what you see in a Kabanga resource. And so we'll see how that continues to play out. And that's one of the projects that could come to market before the end of this decade. The other one that we were tracking, so they put out some pretty good long visual. Some core and some good 30 meters of 3% nickel equivalent, sort of grading 1.8 nickel, 1.8 copper, and so some decent intervals. They provide a verify model, which allows you to kind of spin around and so forth. But again, I think it would help to tell the story to basically have what that exact thickness looks like and what the geometry of some of these shapes look like, just to get a head around to what the scale of the resource could be. But again, some decent results. And again, sometimes where you get these structures, you can get some sort of thicker, higher grade intervals show up. But again, a little more info on some of what that structure looks like, just to see how big this resource could turn into. And again, it needs to be a decent size given the depth that is sitting next to the existing workings. So that's it so far. I mean, we'll have some more next week. Things look like from a drill perspective starting to roll in, and as we get into, we've got BMO, we've got the Red Cloud event, and then PDAC coming towards the end of February. So that usually, people try and line up a bunch of results coming through that. So we'll probably have a lot to talk about in the coming weeks and when we see you in Toronto.
I hope so. I really do hope so, because I think here's the big question I'd like us to be able to answer over the next few weeks is, what to do some of the smaller companies do. There's some, good high grade, I'm going to say sub $50 million companies, some good low grade sub $50 million companies. And the problem they're going to have to solve over the next coming months is, how do they stay alive?
Yeah.
I think you and I were offline, swapping a chart which was sort of doing the rounds a couple of weeks ago, talking about the money leaving the sector from 2010 through 2022. I think in the UK, we went from 40 million invested in
40 billion.
40 billion down to 16 billion. And then Canada went from, was it 12 down to 2.8?
Yeah.
Yeah. So that's, you'll notice that. And it's a question of, what's going to encourage those companies to deploy the similar sorts of monies to that they did back in 2010 once again. And if not, who's going to step in and step up to kind of fill that gap? Because that's a lot of money, and retail are not going to make up the difference. It's been a very depressing period for retail in terms of the return on their investments. So, and a lot of value destroyed during that time. So I think smaller companies, whether it be nickel companies, whether it be other juniors, they're going to have to try and answer that question over the next few months. So interesting times for them, and very interesting time for retail investors like us looking in for sure. But maybe more of that anon.
Yeah, and the key piece here is I think the solution has to be sort of more real private equity capital come into this space, and so. Again, given where valuations today are on a bunch of assets, they're pretty attractive. Private equity needs some sort of thematic to really get behind to start deploying meaningful amounts of capital in the space. And so, again, the critical minerals, again, despite all the noise and the what's happening short term with EVs and so forth, there is a real thematic here, and potentially as well when you layer in the geopolitics. And so, I don't think it's a question of if this private capital is going to come. It's just a question of when. And the key thing for companies is just to, maintain your capital structure, try to get done what you need to get done with keeping your capital structure, as tight as possible. So that, when that money does come, you can, deliver some, value per share, at the end of the day, which is what matters, not your EV. So it's really about your, it's your per share value that as an investor.
Well, even Amazon have just worked that out, haven't they?
Yeah.
Value per share. And they're doing okay. Right. Okay. Well, good to speak to you. I'll let you crack on, and we'll speak to you next week.
Sounds good, sir.